Welcome back to the session 51 BBA Management Accounting 5th semester Bengaluru North University. In this session, we are going to discuss meaning and definition of budget and budgetary control and also budgeting. See, in this is the last chapter, that is marginal costing and budgetary control. This last chapter includes two subheadings. First one is marginal costing, second one is budgetary control. So marginal costing we have completed in the previous sessions. So from this session we are going to discuss about budgetary control, and also we will solve some simple problems on flexible budget also. As I told in the previous sessions or previous classes, we have solved some problems on break even point. What is the main objective of this chapter is that to sensitize the students with the techniques of marginal costing and budgetary control is planning and control. What is the outcome of this session is that the students will be able to understand and define a budget and budgetary control, and also they can able to explain the objectives of budgetary control. First, we will discuss what is the meaning of budget. In simple terms, we can tell budget means it is the map of future action for incomes and expenses. Or we can call budget, it is the statement, or it is the schedule, or it is the expected income and expenditure for future, and policies and decisions, even goals for future, which has been predetermined on the basis of financial and standard statement for future action to achieve the business goals. Next, definition of budget. According to Brown and Howard, a budget is a predetermined statement of management policy during a given period which provides a standard for comparison with the results actually achieved. We can conclude budget is a financial statement, schedule of plans, goals, policies, incomes and expenditures for specific future period. Next, meaning of budgeting. The act of preparing budgets is called as budgeting. What is the definition of budgeting? According to Batty, the entire process of preparing the budget is known as budgeting. Meaning of budgetary control. Budgetary control is a system of controlling all the costs through preparation of budgets. Next, definition of budgetary control. According to CIMA, budgetary control is the establishing the budget relating to the responsibilities of executives of the necessity of policy and the continuous comparison of the actual with budgeted results, either to secure by individual action the objective of the policy or to provide a basis for its revision. Next, very important thing, objectives of budgetary control. The first objective of budgetary control is planning. Here, a budget provides a detailed plan of action for a business over a definite period of time. And here detailed plans includes or relates to production, sales, raw material requirements, labor needs, advertising, sales promotion, performance, research and development activities, capital additions, etc. So, by planning, many problems are anticipated long before they arise, and solutions can be drawn through careful study. The second objective is coordination. Budgeting aids managers in coordinating their efforts so that the objectives of the organization as a whole harmonize with the objectives of its division. For example, the budget of sales should be in coordination with the budget of production. And one more example, production budget should be prepared in coordination with the purchase budget. Is it not? Next, communication. The third objective is communication. A budget is a communication device. It is not the budget itself that facilitates the communication, but the vital information is communicated in the act of preparing budgets and participation of all responsible individuals in this act. Next, motivation. A budget is a useful device for motivating managers to perform in line with the company's objectives. If individuals have actively participated in the preparation of budgets, it acts as a strong motivation to achieve the company's objectives. The next objective, that is the fifth objective of budgetary control, is control. Control is necessary to ensure that the plans and objectives as laid down in the budgets are being achieved. Control as applied to budgeting is a systematized effort to keep the management informed of whether planned performance is being achieved or not. For the purpose of this controlling, a comparison is made between the standard plans and actual performance. That is the plans and the actual performance. If there is any difference between plans and the actual performance, that should be reported to the management for the purpose of taking corrective action. Then the last objective is performance evaluation. Here, performance evaluation means a budget provides a useful means of informing managers how well they are performing in meeting targets. Here, in the case of budget, they will prepare and fix one plan. They have to see that whether the workers are putting their efforts to achieve the targets or the achieve the objective of the organization. In many companies, there is a practice of rewarding employees on the basis of their achieving targets, or promotions of a manager may be linked with the achievement of the managers. That is called as performance evaluation. So these are all the objectives of budgetary control. Next, multiple choice questions. The first question, dash is the map of future action for incomes and expenses. The options are budget, budgeting, budgetary control, none of the above. The right answer is budget. Budget is the map of future action for incomes and expenses. The second question. Budget is dash scheduled of plans, goals, policies and incomes and expenditure for specific future period. The options are income statement, balance sheet, financial statement, none of the above. The right answer is financial statement. So, budget is financial statement schedule of plans, goals, policies, income, expenditure for specific future period. And the third question is the act of preparing budget is called. The options are budget, budgeting, budgetary control, none of the above. The right answer is budgeting. The act of preparing budget is called as budgeting. Next, fourth question. Dash is a system of controlling costs through preparation of budgets. Options are budget, budgeting, budgetary control, none of the above. The right answer is budgetary control. So, budgetary control is a system of controlling costs through preparation of budgets. The last question is dash involves preparation of a detailed operation plan to achieve the objectives of a business. Options are budget, budgeting, budgetary control, none of the above. The right answer is budgeting. Budgeting involves preparation of a detailed operation plan to achieve the objectives of a business. For further information, you can refer these books. Thank you.